Hi there and welcome to the weekly roundup for week ending Friday the 7th of August. Now this week's been a much more upbeat week. We've seen the focus sort of shift away from coronavirus numbers more towards the economic and corporate calendar. On the economic calendar we've seen that the manufacturing PMIs and service sectors PMIs, particularly in Europe and the US, perform much better than expected. There is also a concern though that's hovering around the US labour market. The ADP private payroll report came in significantly worse than expected, and also the employment subcomponent of the US ISM non-manufacturing report also came in much lower than expected. So we are expecting a big focus on today's non-farm payrolls, and that will give us some further clues as to how the recovery in the US labour market is going, or whether it's actually just completely stalled. As far as the indices are concerned, the Hsbc and the DAX are both looking at over 2% gains across the week. We also have in the US the S&P looking at over 2% gains, whilst the Nasdaq and the Dow are looking at gains at over 3%. Here in the UK, focus has very much been on the Bank of England. Now the Bank of England gave a less dovish than expected outlook and upwardly revised GDP forecasts for the UK. So rather than expecting the GDP this year to contract by 14%, the Bank of England have downgraded, have improved that to just a 9.5% contraction. So that's actually a vast improvement. So this slightly more upbeat tone from the Bank of England, or should I say less dovish tone from the Bank of England, has boosted sentiment, and it's also done some heavy lifting for the pound, which actually almost touched 132 versus the US dollar. As far as commodities are concerned, a star performer has been gold. I feel like we talk a lot about gold, but gold pushed through that key $2,000 per ounce level earlier in the week, and today, or earlier this morning in the Asian session, actually reached $2,075 per ounce, so that's a fresh all-time high. Now gold's been supported by the weaker dollar, and that's been a big story again across the week, although the dollar is actually just finding some safe haven flows today. But we've also got the rising tensions between US and China, which is also boosting safe haven flows towards gold. So we've got sort of Trump talking about, or signing an executive order to ban TikTok and WeChat in the US within 45 days. Looking at other news on the corporate calendar, Hsbc, that was the last of the big UK banks to report, and they saw profits plunge by 96% as bad loan provisions were increased sevenfold. Now obviously that stock has fallen across the week, and it it's performed badly since the start of the coronavirus crisis, and actually it's continued tumbling since then. So it's trading around that 323p level at the moment, could potentially be targeting 300p. In other news, BP also reported, but this was some much better news for BP. They reported a smaller than expected $6.7 billion loss. So that was a slight improvement on what was forecast, and they also slashed their dividend by 50%. But as I said, as it was a better than expected result, BP has actually rallied across the week. And another one to look at was ITV. ITV surged 10% across the week. Again, they reported second quarter results, which were actually pretty ugly, but the with advertising revenues down noticeably, profits down around 49%. But the outlook is supposed to be improving, and that's what's sort of getting investors a little bit more excited about the stock, as trends from advertising spend, particularly in July and August, have been improving, sort of pointing to a recovery for ITV. Thanks very much for joining me, and have a good weekend.